With crude palm oil price shooting up in 2021, many people have been asking us this question: plantation stock or buy? Well, if you want to find out, watch till the end to learn the 3 things that you must know in selecting a plantation stock. The plantation sector accounts for more than 8% of KLCI index. Malaysia being one of the largest CPO producer in the world, we have many plantation stocks listed on Bursa Malaysia. That's around 38 of them in total. Some familiar names like Sime Darby Plantation, IOI Group Berhad, while some less familiar ones like TSH and Innoprice. Well, with so many companies, how can we pick the right plantation company to invest our money? Here are the 3 important factors that can help you quickly qualify some good companies into your plantation watch list. When it comes to plantation, one of the most important things for a plantation company is land. Planting oil palm trees need a lot of land. Well, more land means more tree, and more tree means more production, and more production means more money. So it's important for the operator to have a large amount of land or have the ability to acquire land to expand its operation if it needs to do so. And in Malaysia, land is under the jurisdiction of state government. So that means a close relationship with state government that has large excess of land bank would be beneficial for the operator, as it will help the operator to acquire the land necessary for plantation. So that's the first factor. Does the company have an established relationship with state government? Now, the second factor, tree age profile. Since plantation is all about producing crude palm oil, it's important that we learn at least a little about the plant that produces CPO. Oil palm or palm oil, the scientific name is Elias green, whatever lah. Yeah, originally founded in West Africa and was introduced in Malaysia in 1870s. It is considered as one of the most productive oil crop in the world. It needs the least amount of land to produce the highest yield of oil compared to other oil crops. Oil palm can produce 11 times more oil than soybean per hectare, 10 times more oil than sunflower per hectare, 7 times more oil than canola per hectare per year. Yes, it is actually pretty environmentally friendly when you think about it. The nature of the tree, it uses less land while producing more oil compared to other oil crops. Now, going back to the tree itself, palm oil tree have an average lifespan of 25 years. The tree will start producing crops, which is called fresh fruit branches, or FFBs in short, from the age of 3 years old. But as an investor, what you want to pay attention to is what the producers call the prime age of a tree, which is a tree that is aged between 9 years old to 18 years old, as at this time, the trees will produce the highest yield of FFBs. The more prime age trees a plantation has, the higher yield they will get. Well, this is especially beneficial when the CPO prices are on the rise.
Like now.
So, which company have a good amount of prime age tree in 2021? Oh yeah, before we move on further, here is a word from our sponsor. So, you've done your fundamental and technical analysis, but what's next? The truth is, stock price doesn't just go up or down for no reason. There has to be triggers. And these triggers come in the form of information. But with all the news in the market today, it's difficult to differentiate between useful information and noises. Even if you are able to, you may not have the luxury of time to filter this information out. That is why, through our market update community, our team of experts with more than 10 years market experience will do the hard work of filtering the noise for you to bring you the most useful and updated information, helping you to make day-to-day investment decisions. Join us for a 7 days free trial today to gain knowledge, be informed, and filter out noise to make the best investment decision for yourself. Terms and conditions apply. Finally, the oil mill. As you probably know, once the fresh fruit branches, FFBs, is harvested from the tree, it needs to be sent to an oil mill to be processed. An operator with its own palm oil mill is a great plus point generally, as they can directly supply its FFBs to its own refinery for processing without the need to look for a third-party mill to process its FFBs. This improves productivity and efficiency, and it provides a sustainable income for the company. On top of that, some points you certainly want to keep in mind when evaluating a plantation company is to avoid companies with a majority old tree age. As we have mentioned earlier, that oil palm trees have a lifespan of average 25 years. Trees that are old will have lower yield. Therefore, operators will need to conduct a replanting exercise. And this can be costly. With high capex incurred from replanting exercises, it could probably affect the dividend payout in the coming years. For investors, you must bear in mind that even after replanting, we will need to wait quite a long time before the tree reaches its prime age and start producing at its optimum level. And that's 9 years old to 18 years old. Even when that day comes, one will need to pray that CPO prices will be at favorable level at that time for the producers. So, not so easy. Well, the point is, a right plantation company with a good amount of prime age tree at the right time can make a very good cash cow. Therefore, paying out good dividend to its shareholder, making it a great stock to hold, especially during these volatile times. If you like this video, do smash the like button and tell us which plantation stock is in your watch list now.